Well, great day, people of the internet and crypto lovers. Today we're going to talk about the difference between blockchains and some of these alternative projects that build decentralized ledgers on graph technologies. I kind of call them the graphers. So today we're going to talk about Hedera Hashgraph, NANO, and IOTA. Now, as you can see here, all of these projects have been really pumping lately. So if you want to get my technical analysis and see my price targets, wait for the end. We'll get to that at the end. But to get started, again, this is Brandon with Crypto Trades and Tech. Thank you for watching my videos. I hope you find them useful. So let's start by talking about what we are trying to accomplish to begin with blockchains and decentralized ledgers. So as you are all probably well aware of, today, if you want to send money to somebody else without paying them cash directly, typically we use some sort of a bank or financial institution to keep track of money in my bank account going to money in somebody else's bank account. And there's a ledger that they keep with all the transaction records. Okay. So with a blockchain specifically, if we want to record a ledger of transactions, say of multiple parties now, so say we've got 4 participants, got A, B, X, and Z. And A participant sends some funds to X, and then A also sends some funds to B, and then B sends a subset of those funds over to Z, and then maybe X then sends some payment to B, and then B maybe sends some back to A. Something along those lines. All right, so in a ledger, we're going to have a record of transactions. So say we're doing this on Bitcoin, and say A initially had 10 Bitcoin, and they sent, each of these transactions represents 1 Bitcoin. So, and let's say the other participants had 0. Let's make it simple. So A sent X 1 Bitcoin, he had 1. And then A sent B 1 Bitcoin, so he had 1. And A went down from 9 to 8 in that time. And then A received 1 Bitcoin from B, so he's back up to 9. And B sent 1 Bitcoin to Z, so he went from 1 to 2 to 1 to 0, and then Z now has 1. But the ultimate state is that at the end of all this, we need to know that A has 9 Bitcoin, Z has 1, and X and B have 0. And in order to figure that out and for everybody to agree on that, we also have to have the time of the transactions, because as you can see here, it would be possible for B to have tried to double spend the 1 Bitcoin he received from A. He first needs to receive a second Bitcoin from X before he can do a transaction back to A and then down to Z. So he can only do, when he started with 0, he can only do 1 at a time. So time stamping is very important, knowing when the funds were received and how much of account balance you have. Now, this is all very simple on a blockchain. So move over here and we're going to illustrate the blockchain. So the same record of transactions. So I have a block and I have what's called unspent transaction outputs. So the very first input that we have inputs and outputs. The very first input we have is that node A receives 10 BTC, and that's his account balance. So his unspent transaction output is 10 Bitcoin. And then the next transaction, very simple. And then the next transaction, we have A sending B 1 Bitcoin, and perhaps in the same transaction, we'll have X sending B a Bitcoin. So we could have, in this transaction, A and X both send B 1 Bitcoin. So the result is that A's unspent transaction output is 8, X is 0, and B is 2. That's their balances. Now then in the next block, very simply, B then sends 1 Bitcoin back to A, and B also sends 1 Bitcoin to Z. So the result is that at the beginning of this, B had an unspent transaction output or account balance, a ledger balance of 2, and he spent both of those. So B now has 0. A is back up to 9 because he had 8 in his prior block, and Z now has 2. Okay, so very simple to record these transactions. So we have inputs, that's the account that from the last block, and then we have the transactions, and then we have the output, which is unspent transaction outputs. What's left over for these wallet addresses? How much funds are left in those wallet addresses? Okay. All right. So back to doing this on HBAR's chart. Before we draw this out, I just want to read to you what Hedera Hashgraph, for example, says about their capabilities. So we're on Hedera.com, and you can see here they've got some advertised improvements to the first generation they call Bitcoin, second generation they call Ethereum, they call themselves a third generation, and they're not a blockchain. They don't work like a blockchain, but you can see the finality is much faster, the transfer fees are a lot faster, or a lot less, and the transactions per second are a lot faster. So you can see here they say Bitcoin pioneered decentralized infrastructure and Ethereum brought programmability. But earlier proof of work blockchains consume massive amounts of energy and process transactions slowly in order to achieve acceptable levels of security. Hedera, proof of stake public network powered by Hashgraph consensus, achieves the highest grade. So now you would think in reading that this is a blockchain. Well, the truth is this is not a blockchain. This is a decentralized ledger built on a graph. Okay, and very simply, how these graph systems work is instead of a recording in a serial nature one after the other, having a block that has a record of transactions encrypted and then cryptographically chained to the next block, what they do is they build what's called graphing technology. So we can visualize it something like this. So our same participants, A, B, C, and D, or I'm sorry, it wasn't C and D. It was it Y and Z or X and Z? We'll just say X and Z. All right. So what it is a record of transactions recorded in a different way, and it's very much tied to functions of a graph. So they call this gossip about gossip. So basically what it is when you look at this, if A initially receives 10 Bitcoin, so we find out that A has 10 Bitcoin somehow, and or HBAR or whatever it is, right? So whatever the currency is. And in that same scenario, if you recall, I think A sent some funds to X. You can record it and make it look like this. And it happens, instead of having to wait for an entire block, what you do is you record a timestamp. Okay, at this time, A sent funds to X. And then at this time, X received those funds. So you can see that record of transaction. You can verify it later. And then we also had A sending some to B. And then we had a situation where B sent some funds to Z. And then I believe X to B. And then maybe B back to A or something along those lines. So you can see here how we can keep a record of these transactions in a different way. And this is more or less a graphing technology. So there's a couple of things that are needed in each of these transactions. A timestamp is really important, and you cryptographically go ahead and sign these transactions. But they're timestamp series recorded so that we can stitch them back together. And at the end, we see the final state. Same thing, A would have ended up with 9. And you see that B at one point had 1, but it debited 1 and 1. So now B has 0. And then X also was credited 1, but it debited 1 as well, so it no longer has any. And the final state is Z has 1 in this graph. That would be our final state. So that's how these graphs are a little bit different than traditional blockchains. Now I want to talk about one which was an early pioneer in this space. And on top of they use a directed acyclic graph, DAG. You're going to hear that term a lot in crypto technologies. So I pulled up the Wikipedia article here. The main takeaway that I want that we need to understand about these DAGs is that the function of it is, and you'll see them represented by these kind of looping looking circular. So this talks to this, and then that talks to that over here. And that what it is it's orchestrated in such a way that it doesn't create loops, or something doesn't loop back on itself, right? And that's the idea. That's when you hear these directed acyclic graph, that basically is, to very oversimplify it, it's a way to make sure that the communication keeps moving forward and doesn't create a loop in the system. or a loop in the logic, really. All right, and for the sake of scale, so now we've got IOTA using this kind of looped or non-looping orchestration of events talking to each other across a graph-like technology. It's like what we described with Hedera. Now, something that IOTA does to help scale the system is when you have a transaction, this is called their Tangle protocol, and you want to verify send a new transaction. What you have to do is go verify a prior transaction, or more than one prior transaction typically. So in the first one, there was only one to verify. So as we add new transactions, I'm going to go verify multiple prior transactions to have my transaction added. And so it's kind of a reverse looking DAG when you look at how the Tangle protocol starts to web out as it validates prior transactions, and it looks for the least validated transactions. So in order to have its transaction added, it starts validating prior transactions. Okay, this is called the Tangle protocol. So in theory, the more participants and the more transactions are added to the network, the more nodes there are processing prior transactions, and the faster the system gets. Also, as you see, as you get further along out here, this last transaction I drew in, since he's validated this transaction and this transaction, let's see the number of times. So this received one validation here, a second validation, or it received really its first validation there. But then this was a third validation of this original, right? Over here, that was a third time. It was also validated a third time and a third time here. And that same transaction was validated a fourth time out here and out here, these two transactions. And so, again, if we added another new transaction, he's going to go validate, he's going to go pick threes, and there'll be another fourth layer of validation, and he's going to go pick some, transactions to pick at the edge. And it keeps picking transactions at the edge. And I believe I'm drawing this wrong because it would spider out this way as well. And so what we do is, as you get further along, you have multiple validations, and so the security increases over time at the center, so the original transactions get confirmed, much like the Bitcoin blockchain. If you recall, the further back your transaction, the more times it's been cryptographically signed and then linked to the next, the harder it is for an attacker to go back and change that transaction in the past, because they not only have to change that transaction and then sign it, they have to catch up with the network and overtake the network. So in order to change something that happened in a block, say a year ago, you would have to have exponentially more power than the processing power of the entire Bitcoin network to be able to outprocess the Bitcoin network and catch up to it at some point and overtake and be the longest chain. Similar concept here with IOTA and how its Tangle protocol works. The really important thing to keep in mind with all of these projects, and I'm trying to simplify this, I'm already at 13 minutes, so I'm oversimplifying some things. The important thing to keep in mind, these are not blockchains. And IOTA had a pretty nasty hack. So when you start building, you have, this, it's not a linear, simplified architecture. When you have this much more complex architecture, security, there's a lot more potential for security risks. And IOTA had a flaw in the system, which caused a major incident in early 2020. So a couple of things that came out of that hack, though, that we should talk about is the use of something called the coordinator node, which validated nodes participating in the network to make sure they weren't malicious. And that has some centralization effect. Now, they're moving to a decentralized version of this coordinator. But they also had to change some of the accounting methodologies in the network because of the hack that occurred. The main takeaway, though, is that these technologies are not fully sorted out yet, and they are far more complex than blockchains to build and operate in a decentralized fashion. This video is getting a little bit long, so I'm just going to summarize Nano for you guys. It has an orchestrator called Railblocks, and it uses a block lattice structure very similar to what we're talking about. It's a directed acyclic graph as well. A little bit different, though. Each account, again, the accounts have account chains, so each account has a chain, basically. Similar concept what we talked about earlier. It uses a delegated proof-of-stake system. So you guys are probably familiar with that term. There's proof of work, which is what miners do to try to solve a complex mathematical problem. And then there's proof of stake, where nodes are awarded the ability to mint blocks by how much they've staked or how much they have delegated staked to them. And a delegated proof of stake is a pseudo centralization mechanism. So what it is so rather than having a completely decentralized set of nodes that are doing operating the network and minting new blocks, what these delegated proof of stake systems do, and EOS and a few others use these, is they delegate a handful of nodes to do the validation. So basically the community votes on a handful of nodes. Now, this is obviously a form of centralization. Really, you're trading off decentralization for centralization, having a few centralized nodes that compete. They compete against each other, and in theory, bad actors should be weeded out through the voting process. But there's still some concern with that. But it uses a delegated proof of stake. And interestingly, Nano has a small proof of work needed for every transaction. This helps to prevent spam on their network, actually. So there are 4 transaction type fields that have a work field associated, or there's 4 transaction types that have a work field associated with them, And these work field compute a nonce and a hash, just like you would in a proof of work system. And so for a subset of the data in the network, there is proof of work going on. That's another way of saying that. But it's not the primary consensus mechanism. The primary consensus mechanism is a delegated proof of stake consensus mechanism. This proof of work is just an additional layer on top of for some of the messaging. All right, we've gone on long enough with the technology. I think I'm just trying to keep it as simple as possible. I think you guys get the idea that this is a different technology than blockchain. It is HBAR, NANO, IOTA are 3 examples of ones that are not blockchains. They build a decentralized ledger in a fundamentally different way. IOTA has taught us that technology has not been fully figured out yet, that there's still a lot of work to be done to secure that. It doesn't have anywhere near the breadth of security that proof of work, and namely Bitcoin, has proven to have, and Ethereum's network also has far more security than these networks have. However, they have a huge amount of promise. So I think the big reason the market is excited about these is namely the winner, or somebody, the project that really figures this out and gets a good ecosystem around graph-based decentralized ledgers, is going to have a huge advantage moving forward, potentially. All right, so if you see here, IOTA's on a strong uptrend here. It's about $1.33. I used to have a lot of IOTA, and man, it spike early this year, big time. Yeah, I just see it on a strong uptrend. We're kind of in alt season right now. It's to be seen how much longer the alts are going to be really strong, and when is it that Bitcoin starts to suck the life out of the alts. So I quickly here, I'm just doing some technical analysis. You can see that this was starting to kind of be in a channel here, and it broke out of the channel. And I bet if we clone this trend line and put it up here, you'll be able to find a higher channel. So this is kind of just in an uptrend channel on IOTA. I may be coming into some support here. So, if you're really interested in this project, these are some good levels to be watching. The level I have is about 129. And so you want to stay above that, get a good resumption signal off of that. I'm not going to do a whole lot of technical analysis. I would say break that little bit of a downtrend. We've had a false breakout there. Tried some bodies that didn't get quite above there. I would say you're kind of forming into a bit of a wedge here. So the top of this wedge is right around $1.40, and the bottom support that I've got drawn on here is about $1.29. So you're kind of wedged in between there right now. You need to see which direction this breaks. A breakup and confirmation of that, great. And then obviously breakdown, you just stay away. Let's take a quick look at Nano. Similar pattern here on Nano. You can see these whole bunch of touches here, kind of forming a bit of an uptrend as well. A very similar setup. Also kind of getting into a bit of a wedge. Let's see if we can get a bit of you can see a little bit of a channel there. Some trends that are going on there, but I'm not going to draw the upper end of this trend line because I just want to focus on this structure that we kind of clearly see here. I get another wedge pattern forming, and then so within this larger wedge pattern, we obviously have some local support and resistance that are coming into play here. I'm going to draw just what I see real fast on a horizontal level that I can kind of, the top of that wick right there is going to be support. That's 574. So, playing inside of this larger wedge pattern, it isn't an uptrend. You already had a breakout. I'm looking at the 4 hour to give us some real high fidelity. We go to 12 hour here to take a look at this. So this might already be a breakout of that level, a retest, and maybe a resumption into that. you're going to want to look to take profit coming into this upper trend line maybe, and then seeing what happens with that, whether you get rejected and come back down and re-enter a trade here, or if you break out, you could re-enter the trade on the upside up there potentially on Nano. And then lastly, HBAR is super bullish. This one seems to be getting the most buzz, like they have the most traction with their project. And I do believe they probably are the strongest technically of the projects based on the limited amount of research I've gotten to do on the newest updates with these. And I will continue to research these, and we'll see if I can come out with a recommendation. As of right now, if you're really, really interested in the space, I would definitely say HBAR is the one to look at. It has a lot of large backers to it too. So you can see here it broke the 12-hour. We might have already missed an entry. I'm sorry. I should have got this video out maybe a little bit earlier. That was a really nice entry. Got a nice breakout of the top of this uptrend trend line, and then retest and resumption. So that would have been a beautiful entry right there. Right now, we're in wait and see mode. Most likely what will happen is when it's all said and done, this will end up being, let's extend this up here. What these typically end up doing is they have a big breakout pattern and then come back into this upper trend line. And then we'll see if it falls back into the channel or if it resumes off that top of that trend line. That's what I would wait for. At this point, you know, because that breakout and retest of that trend line could come back right where we're at. It could fall back down and into this trend line. So, you know, you had an entry here recently, and maybe it comes back in and plays on top of this upper trend line some more, but I would wait for this to flesh out. It's looking very bullish, very nice, but that's it's clearly an uptrend, nice strong uptrend channel. I think you already had your entry, so you'd be chasing a little bit to enter here, but I hope you guys enjoyed the video. I hope you found this beneficial. Please like and subscribe if you've made it this far. You're a saint. I wouldn't have made it this far myself, but thank you all for your support. Appreciate it. Have a good day.